Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. 26th day of October 2018, and this is the daily report for gold and silver. Nice moderate finish to the upside in gold today, gaining about $3 on the day, about a 0.25% move, and currently December futures are at 12.3540. We are long at 12.27 and change. We will talk about our trade in detail when we look at our technical studies. Silver gained 7.5 cents in trading today, a 0.5% rise, closing at $14.70. Platinum also gained about a 0.5%, $4 gain at $836. And lastly, palladium gained just under 0.4%, a $4 gain at $1,091.60. Now, that all came with tailwinds provided today by a weaker U.S. dollar, down about 0.3% at 96.18. And interestingly enough, we had more pressure in U.S. equities. The Dow Jones Industrial Average losing almost 300 points in trading, 24,688. Standard & Poor's losing about 1.7% at 2658. And finally, the NASDAQ Composite losing about 2% in trading today at 7167. Traders, a most interesting week as we see gold pricing ascend to higher values now for the fourth consecutive week in a row. We're looking at our weekly candlestick chart. We can see that although the gains on the week, which amount to about $6 to $8, were muted when compared to previous gains, nonetheless, this is the fourth green candle on a weekly chart that we can identify, and that tells us that we are clearly in a bullish trend. I believe that we are now in an intermediate bullish trend after taking out the former level of resistance at around 1218, and it occurs as the 0.618% retracement, and it is quite a long data set that we're using for this retracement series, which is beginning at approximately 1124 and then takes us all the way to these record tops that were achieved not only this year but over the last couple of years in insurmountable resistance area at approximately 1370. And traders, the most significant characteristics noted over the last couple of weeks in trading were two major milestones that gold was able to transcend in trading last week and this week. Of course, we've got to go back a little bit further than that to these lows in mid-August when the market actually traded to 1164 as the lowest trading point that gold experienced this calendar year 2018, and we can see that 200-point drop right here. Now, from there, it did attempt to form some sort of a rally. However, any kind of price advances past the 0.618% retracement were put into check quite quickly. In fact, what we can see is that before the market broke to these lows, we could use this area as a concrete and defined area of support. It was highly supportive until it broke down below that. However, at the same time, what we can determine is that once the market broke below that, this price point became a serious area of resistance. Now, that all ended a couple of weeks ago when on Tuesday, October the 10th or 11th, we had this sizable spike up $30, and that was the first of these two milestones, because the first milestone was the fact that we finally breached this ceiling at 1217, and we did it with a vengeance. First, above the key psychological level at 1200, above the short-term 50-day moving average, and that occurred on the same day. And then finally, this move and close above the 0.618% retracement at 1218. Now, that brings us to the last couple of weeks in trading, and what we can see is that we had this 100-day moving average definitely being an area of resistance, because last week in trading on each consecutive day, the market challenged this particular price point and closed below it. That was up till Tuesday of this week, when we finally broke above that particular milestone, the 100-day moving average. Wednesday of this week, Thursday, we got a higher high and a higher low. Today, we also had a higher low and a higher high, taking the market up about $3 in terms of the close, but most significantly running into the next real level of resistance, which we talked about throughout the entire trading week, and that is 1246, and that is comprised of the 50% retracement from the same sequence. Therefore, traders, we are long roughly at 1227 and change. We currently have our stops just below the 0.618% retracement. I believe our stop is at 1216.13. We're going to leave our stop where it is for right now, and we will maintain our current long position. What we want to see next week is whether there's some real resistance here and pushback. In that case, we might see a drift back to lower pricing, or we could see it just kind of barrel straight through. If we get the latter, meaning the market kind of barrels straight through and then forms some sort of a base, this price point, call it 1245, would become the new real level of support, and then it would take our resistance to the next milestone, which is the 200-day moving average, currently at 1276. Therefore, traders, maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Have a great weekend. Bye-bye.